me introduce you to Lindsay Screen from Edde Education, and you both know Mike Richards, who works alongside me in the South East.
Just to introduce myself, my name's Lindsay Screen. I work for a company called Edde Education. We are an independent finance broker and one-to-one provider. We work solely in the education sector. So we know all of the legislation surrounding schools financing and anything else that goes on in the background, really. I've been worked in the public sector for 30 odd years now, so I've seen it go full circle back round again. In terms of what we do, there is parental donation schemes, laptop insurance, and then all sorts of finance within the industry, be it from the general IT stuff that you see from Kelly to football pitches, LED lighting, all the rest of it. So the main thing to talk about today was the changes that's happened in leasing within the last year and a half or so. So where we were, so going back to 2008, Gordon Brown, when he was then Chancellor, came out with a very global statement saying that schools can't borrow. So overnight, that changed the scope of what schools could do. Some would say for the better, some for the worse. It was very, very limited at that point. And obviously with anything changes, very uncertain. So that was the first lot of uncertainty that I saw in my career. So schools at the time accounted for under UK GAAP. They were only allowed to do operating leases because anything other than an operating lease was considered a borrowing. And operating leases basically means that you had to have a residual value in any kit that was financed. So there had to be a true resale value that the funders could realise at the end of that contract. If they didn't realise that, it was their risk and reward. But from a school's perspective, it meant it was very limited in terms of what they would do, and also quite uncertain as to what the future costs were and things like that. You always found yourself with strict, intense audits, sometimes you still do, but I think there was no real consistency around auditors at the time on what one would consider an operating lease, another would disqualify as an operating lease. Just led to uncertainty, and it was very difficult. All of the operating lease was off balance sheet, so it was a revenue expense rather than a capital expense, which did suit a lot. At the minute, I don't think it really makes that much difference because there's not much of either. But again, if you only had capital, there was no point in leasing. Restricted assets, again, due to the resale value. So if you were looking, and again, there was a lot then, you may be pushed along your tier. You might have wanted to consider, an asset that wasn't well known. And then people don't know the resale value. So it was very difficult, even though it might have been cost effective to begin with. Had to be less than the useful life. So boards and things like that, a lot of people would say boards can last for 10, sometimes 15 years. They were having to be leased over a 3-year period to qualify as an operating lease. So it was inevitable that they were potentially going to be purchased or kept indefinitely after that period of time. Non-specialised, obviously there's no resale value in something that's very specialised, and then a very small amount of intangible costs. So if you had things like infrastructure, which is can be high on consumables, things like cabling, professional services, install, some software, then it made it very, very difficult to structure transactions to qualify as operating leases at that point. The main things as well was the cost of return was so uncertain. So different banks had different aspirations in terms of the overall yield that they wanted, and sometimes it could just depend on whether they were having a good or bad year as to whether they charged an awful lot of money at the end or not. And it varied massively, and that led to unforeseen costs, which again sometimes led to a bad taste in people's mouth with operating leases and leases in the past. So what was introduced actually in 2021 for the whole of the public sector was international accounting standards. So this was adopted by NHS trusts and local authorities some time ago. With COVID hitting, SIPFA effectively asked for the schools for it to be deferred for the schools because it was just too much to ask at the time when all sorts of stuff with COVID was going on. You know, actually the intention was to teach rather than worry about changing in standards. So if you now see IAS or IFRS, these are the international accounting standards and standards that's going on. So this is all obviously based on state schools. So academies do work slightly differently in that you can adopt international accounting standards. Most, I believe, have kept on UK GAAP, but it makes no difference into what you're allowed to do. So as of September last year, the Academy's handbook changed to say that you were allowed to do the same as state schools, the same as what happened with VAT when that all happened many years ago when academies first started. So where we are now, so the statement that schools aren't allowed to borrow is actually still live and relevant. So what the government have actually come out and done is they've said you're not allowed to borrow, but we give you consent to do it for these particular things. And this is this was about 6 months ago, this one that I printed off actually. So it is changing where people are rallying for things like, so on here you've got things like LED lighting, minibuses obviously, temporary classrooms, things like solar panels, that I know there was lobbying for that to happen. We can now finance all software transactions. So if there is a benefit, so if for instance you have a 1-year license but someone's offering you a term license for 3 years, which would be cheaper to spread over 3 years, we can actually finance those things over 3 years. What it has done, thankfully, is it's made it sort of more appropriate in terms of what people are doing. And, you know, you now have the ability by government itself to be able to do whatever you want to do. So international accounting standards effectively means that all leases are accounted for in the same way. So whether they have a residual or not, because there's still residual value leases out there, you still account for them in the same way. There is one qualification to that, which I'll come on to on the next slide. But this is government. This is from a government site. So there's various different government sites from both the state, local authority schools perspective and MATs and academy perspective, where you can effectively just go on to that site and it gives you guidance in terms of what you're doing and what you're allowed to do.
And Lindsay, just a quick question. If one of our schools wanted, for example, to refresh the kit in their gym, and we're also doing an IT refresh, would they need 2 different leases for that because it's 2 different POs, or could they just have the one?
It really depends on what you're wanting to do with it. So if it was something like boards, then you know it's appropriate that they go over 5 years, same as gym equipment. So actually, if you go to a funder with a larger deal that has both gym equipment and boards on there, then you'll get a better rate. So the next page, what it means, and there's a little bit of that in there actually. So now you can have much longer leases. So, you know, if there is things like servers perhaps, or boards that you can, a lot of the funders, if you're going for 7 years, they do want to have a 7-year warranty available, just so they know, you know, funders, as much as they've been in the market a long time, they're not experts in these things. So they're covering their backs to say, you know, effectively, you know, will it last for that period of time? A warranty will help it last till that period of time. So you can have that. Again, there is a lot more flexibility with software's warranty and install. So if you are looking at big infrastructure projects, you're not faced with a massive, like, intangible cost that you have to pay for. It can all be wrapped up into that lease. And again, there's different lease providers out there do different things, and they're better at different things than others. So it's our job as a broker to, you know, it may be even on a quote that you see from us, the 3-year rate that we give is a different bank than a 5-year or a 7-year rate. So it's different. And I suppose it's the same with kit. If you knew someone wanted something to last for a robust period of time, you might go for one manufacturer. If you're just happy with 3 years and send it back, you might go for another. So it's all about, you know, what's most appropriate now. Operating lease is still available. So, you know, there are still fantastic residuals out there. And, you know, for things like laptops, your one-to-one schemes, it's about, you know, getting on that treadmill, getting the best out of the kit, sending it back and go again. You'll never pay the capital cost over that 3-year period. But you have to be really regimented in it going back. There's none of the silly return condition, or there shouldn't be any of the silly return conditions out there anymore. We're very strict on what's in a document in terms of, you know, it has to go back in original boxing and all that. It's just irrelevant. I mean, in a court of law, you can only be sued for what you're wronged, and that box is not going to make a penny's difference to the worth of the kit. So, you know, again, we help with the documentation that way. And then on or off balance sheet. So a lot of the trusts out there, again, they are still doing revenue and capital, and some of the local authorities are as well. You can still have, so there's a clause within international accounting standards to say that if there is an item of kit that's less than $5,000 as a one-off item, so any board, any PC, any device, there's nothing that's going to be over that $5,000, then you can still class it as off balance sheet. The majority of the trusts out there, the NHS trusts out there, do all of their, they consider most things consumable, I have to say. So all of the PCs, any boards, anything like that, anything that's out with like your social cares and stuff like that, it all goes off balance sheet. So there is a conversation that you can have with accountants to you know, so you can have the best way that you want. The other thing that we can do is we can structure longer term leases as operating leases, but with a guaranteed extension period. So again, there's more leeway in accounting for things in the way that you want to account for them. I know that the DFE are they're sort of pushing you down the route of wanting stuff to go on balance sheet, so they're wanting you to use more finance leases. But again, it's down to personal trust and on what, you know, what from an accounting perspective you want it to look like as well. So parental contribution schemes are always back to around a lease. What used to happen with those schemes is we had to put in an element for a residual value. So this is where parents contribute to have devices throughout the school, whether it be BYOD, so part subsidised, whatever it might be. It was quite difficult for the school to see where they are with the monies that are coming in against what was due overall, because there was this element of residual value. Now with a finance lease, so without a residual value, it's a straight in and out. So it's a lot easier to administer, a lot more transparent, and you know exactly where you are, rather than hoping, well, not hoping, because our system will tell you exactly where you are, but you know, you have to have that money in a pot waiting to pay the residual value at the end, and there's not many pots that don't get spent in schools, unfortunately. So that's just a little bit about that. So that really is what the differences are. From my perspective, it's made life a whole lot easier. So, you know, I feel like now we are, you know, previously, you know, operating lease got people out of a hole at times, but you knew that there was that potential, that when it came to the end of that period, there was that uncertainty, and you don't have that anymore. So now we can advise a lot better. We can still do things like defer the first rental for into next financial year, or budget match if you've got, you know, big things that, you know, in different years. But yeah, it's just made it a lot more flexible, and I think from a school's perspective, hopefully a lot easier to understand, and a lot of the smoke and mirrors that were there have just gone. So that really is it. That's leasing in a nutshell in terms of where we were and where we are.
Of the trust that couldn't join us this afternoon, did ask a couple of questions online. One of them being, hopefully you'll know this answer, Linz, is could Eddie help with leasing us from our current one-to-one partner and switch over to Eddie? I'm not reading between the lines there, but they don't sound very happy.
Yeah, unfortunately, we have seen a lot of this year, I have to say. We can work with it. We can work with any provider. Obviously, it's a switch, so we won't take on things like repairs, because some of the providers had a repair service that was paid for upfront for 3 years.
Yeah.
Or if it is one of that, we actually have an insurance provider that provides a proper insurance on a renewal basis, on an annual basis. So we can certainly, you know, then we could switch insurer at that point. But no, yeah, we absolutely can. I think it's great that schools are embracing one-to-one schemes, and I think there's an element of having to, because one, if as a parent, if you want your child to have the best possible education, and they're going to schools that are embracing technology, some still aren't, some, you know, some are working very well without it, but I think the majority are now. Then it's almost an expectation that you know, you're going to have to give towards it. And I think the morality that was happening years ago has gone now. You know, it's a case of come here and you provide a Chromebook, you provide your PE kit, and if we ask you for any money for travel, then you can do that as well. But yeah, we can certainly do that. Or I think in years gone by, there was a lot of working on spreadsheets, and that was okay when the BYOD was small and maybe, you know, just 1 year intake. But now you can't work with that. Our administration system is a real-time portal, so anything changes, it changes immediately, and the school has direct access to that, as do we. And they can make their own notes on there and things like that. So yeah, absolutely, we can do that.
Brilliant. And we had another school that unfortunately sent their apologies, but we're wondering, and you did allude to this earlier, what the best period of time is for leasing of kit. So you did mention, if we're going for a 7-year option, ideally we'd be looking at a 7-year warranty. So that's ideal for audiovisual.
Yeah, absolutely. So it's the most appropriate now, you know, but as I said, the most appropriate might be stretching a Chromebook to 5 years so you can get the least possible cost, or it might be, you know, having the best possible kits and changing it every 3 years. It really depends. You know, there's the sort of, this is over 3 years and this is over 5, this is over 7. It's gone now. It really is. Yes, we can do this over whatever periods it might be. So boards would be up to 7 years, but actually the most appropriate for the school might be 5, might be 6.
Yeah.
You know, so again, it's about having that conversation as to what's the best for the school.
Fabulous. And how easy is it to align leases? And by that, I think the question that came in was along, if they were to do a summer purchase, Windows 11 update's probably a good one to use at this moment in time. And then come Christmas, they need to approach you or us for some more kit. Would that be individual leases, or could they do an aligned lease? How would that work?
Yeah, so I suppose aligned leases were more because of the thought of having an operating lease, so you're having them going back at the same time. So now if you're going to own them at the end of it, it doesn't actually matter. So you can so there's 2 different things you can do. If there's 3 or 4 pieces of kit, we can just simply do a variation to the lease that they already have. So you can just add those 4 bits, increase the rental, and it finishes at the same time. For me, if you're on a lease with no residual value in it, you just do another one, because it doesn't actually matter and you're spreading the costs over that period of time. But again, it's you know, if they think actually we want that to fall in a budget year, so we want it to finish before that budget year ends, then fine, we can do it over 4.5. You know, if it was over 5 before and it was September and now we're March, we can do it over 4.5. So there's I think there's a lot of myth and mystery about what flexibility is out there. Simply ask the question, and that you can generally find the best workaround for it.
Claire, was there a question? I've seen you come off mute as well.
Hi, yeah. Well, I just wanted to ask, I'm just getting a bit confused because I'd read something about a new lease sort of requirement in 2026 about most operating leases being capitalized. And
so that is what we're talking about.
That is, right, okay,
yeah. So effectively, that's international accounting standards. So that it is a fact that there is no such thing as a lease now. So there's no such thing as an operating lease. So effectively, all leases should be capitalized. However, we've got the low value assets.
Yeah, which will be a lot of the stuff.
Yeah, absolutely. So again, so actually at that point, Claire, it's your choice. So if you wanted to capitalize it, you don't use the low value assets.
Yeah.
If you did prefer to capitalize it, then it goes back on there.
Fab. Thanks, Claire. We were asked what are the main impacts of financial decisions on pupils and students, which I guess Claire that's just been talking with us, Joe that's on, I guess all of us have got our own view on if you don't spend, what happens to the pupils. But from this point of view, if we don't make a good choice,
I think it's one step worse than that, because unfortunately we've almost got to the point. Well, there's a lot of schools that have got to the point that they're waiting for a catastrophe to happen. You know, and we've seen that this year. We've seen schools hit by cyber, you know, and for buying that 10 grand server, or, you know, spending 50 grand on their infrastructure, you know, they've had to give school 1,000 kids, well, 1,500 kids meals for a week because they couldn't use the cashless catering system. That probably pays for that. And what I think, you know, it's that you cannot wait for that to happen. Because one, it, you know, definitely impacted on the education of the kids, whether it be from registering, you know, even like taking the register. They couldn't even take the register. But I just think, the main thing is please don't wait for that, you know, to happen. There is ways and means of getting the finances that you need. You know, it's not easy for anyone out there. There used to be more of a north-south divide that it was. I think it that's just, you know, it, and I think the thing is as well is what always happens with like a change of government is that everybody waits to see what will happen, and those delays just don't help anybody, I don't think, you know. So having seen the delays happen and then stuff happen, and sometimes then you're faced with buying stuff very quickly that you don't really want, you know, or you're buying something that you have to, rather than, you know, making like a bit of a longer term decision. And that's all I would say, really. There's generally ways and means out there, and just don't wait for that.
Fabulous, thank you. I'm just looking because we had unfortunately there was just, it's been one of those weeks, I think, for our schools where they've lots of things going on, including the end of the exams and leavers assemblies, sports days and things. The last one is one of our lower schools has asked what the main benefits are for leasing, and she has caveated that with, I need to go and educate the governors.
Yeah, that's probably a really good one. Yeah, absolutely. So, but I mean, I think now it was a harder conversation when it was just operating lease.
Yeah.
You know, because actually it was a case of operating lease is brilliant if you know that you're going to send the kit back. So, you know, take the bank's money, let them have the risk and roll the kit.
Yeah.
But again, you're still in control at the end because none of the banks want it back. So,
No.
you know, so I think sometimes, you know, that when they just get an email through saying it's this amount of money, they can push back. And we often push back saying, well, we're not paying that, you can have it back then. You know, so, you know, so there is an element of control there. But now it's the flexibility that it allows you. It's the fact that you don't have to wait to buy things like boards is a good example again, you know. And this might not be like a financial thing, but you know, if you've got even a primary school that's like got 6 classes and they can only afford 2 boards a year, so you've got 4 teachers then that are all annoyed that they haven't got the newest boards, then the next year it's a slightly different board than it was last year, so there might, you know, it's slightly different training, different migration. Just buy 6, lease them for even 3 years, you're paying exactly the same amount, you're paying fractionally more, you know, so that migration of just doing it once is so much better. I think that's probably the biggest benefit, is being able to have what you want now rather than thinking, right, that's in the budget for next year, that's in the budget. We can take 7 years worth of spend now and actually look at what's best where. And it often comes out cheaper than what the expectation was over that 7 years, because obviously there's always an element of interest costs and you know, retail price index changing and things like that. So and you always put up, but actually from a kit perspective, you find that the kit now, if you're going for the same standard of kit, it's generally a little bit cheaper. It doesn't, you know, it's not going up and up in price. All right, if you go for the top of the range, it might be, but from an education perspective, there's pretty much a cap on how much you know the big tier manufacturers know that they can get away with, or you know, is appropriate to be going into a school. So you're then getting exactly the same kit but 3 years younger. You know, you're not paying for warranties. You've not got that cupboard in the corner that's got a whole load of kit that's being cannibalized for this here and that there. You know, you just and IT are doing what IT should be doing, rather than mending kit with bits of other kit that is 10-15 years old. Right, Brill. No, well, thanks ever so much for the opportunity. Anyway,
no, that's cool. Thank you for your time, Joe and Claire. Thank you for joining us. If you think of any questions after this, you both know how to get hold of us. Please do shout. If you want to book some one-to-one time in with Lindsay or ourselves, as always, you know, just let us know. We will make a copy of the recording available with the Lindsay's slide deck and the answers to the questions and the answers to those questions that were asked. You'll have that within 24 hours. And yeah, brilliant. Thank you so much for everybody's time. We will see you soon.